scan and join the conversation. There'll be some questions that you can answer, and you can share your feedback regarding the event or share some questions that we'll be able to discuss with our panelists this morning. If you need assistance, we have a team in the room that can help you. You can ask take the team at the back to project the QR code for Slido. You can scan it with your smartphone or just use the code 670542. 670542. We'll be starting shortly. Good morning, ladies and gentlemen. Good morning. I can't hear people in the room. Good morning. It's good to see you. Welcome to this morning's monetary policy statement. Honorable Governor of the National Bank of Rwanda, Honorable Deputy Governor of the National Bank of Rwanda, Honorable members of the Senate present, members of the Parliament present, Lord Mayor of the City of Kigali, Honorable Governor of the Eastern Province, heads of banks, development partners, distinguished ladies and gentlemen, all protocol observed. Welcome to the presentation of the Monetary Policy and Financial Stability Statement by the Governor of the National Bank of Rwanda. My name is Bob Allen and I'm pleased to be your host this morning. As per our agenda, we'll have the presentation by the Governor of the National Bank of Rwanda, Honorable John Rwangombwa, followed by a Q&A session with the audience present and those online. Soon after this, we'll have a panel discussion, and then we'll have the launch of the web comparator, followed also by a panel discussion. For the media in the room, you're welcome, and we'll have a press conference soon after this event. Ladies and gentlemen, the objective of today's monetary policy and financial stability statement is to assess economic and financial developments of the year 2021 and give an outlook of the year 2022 and beyond. This statement first presents the global economic developments and also the domestic economy with the financial performance before concluding with the outlook. You can interact with us online by using our official hashtag MPFSS2021. You can share your feedback, comments, and also, as I've been mentioning, you use Slido app. It will be projected a QR code that you can scan, and we can be able to interact with you. You can share your questions, and we'll be able to share them with the panel. Now, ladies and gentlemen, allow me to welcome the Governor of the National Bank of Rwanda, Honorable John Rwangombwa, for his remarks. Also, I would like to welcome the Deputy Governor, the Chief Economist, and the Executive Director of Financial Stability to the floor.
Thank you, Bob. Can you have the presentation on the screens? Honorable Senators here present, the Mayor, City of Kigali, Governors of provinces, our board members of the National Bank of Rwanda, CEOs of financial institutions and other institutions, distinguished guests, good morning. Yeah, it is my pleasure to welcome you to this Monetary Policy and Financial Stability Statement for the first half of this year, looking at what happened last year. It's indeed a pleasure that we're able to meet after 2 years. I think the last time we met was in February 2020. That's the last time we had physical meeting. I know we had one, I think, in August online. So we should really be proud that today we are able to gather here. So we thank God that protected us, but we thank also everybody globally that did what they had to do to bring this pandemic to manageable levels. It's not yet over, but at least we can sort of live with it today, which is a good achievement that we should be proud of as the global community. But more specifically to our leaders that were able to mobilize vaccines, and so I think we are among the highly vaccinated populations across the world. So this statement, normally as usual, we look at the global economic performance, putting into context our national economic performance, and then we look at the financial stability, as you see on the screens. I know most of you are thinking of the current challenges, the rising prices, the Ukraine-Russia crisis. I invite you to sit back and first appreciate what we have gone through over the last 2 years. We'll be showing you the numbers in 2020 and how we are able to overcome the crisis we had in 2020 that was, I think, much more serious than the one we are facing today. Then we'll look at what we are facing today means. So let's go to the next slide, please. Oh, this is me doing it. Okay. So as I said, we'll start with the global context. Maybe here you see in the detailed document that 2020 was really a bad year across the world. Global economy was negative, as was our economy, and most of the economies across the world had a negative growth in 2020 because of the pandemic. So as I was saying, we should be happy that we're able to work together across the globe to deal with the pandemic and therefore allow the economy to move to positive numbers again. As you can see, we had a big growth in 2021, the global economic growth, and this was much higher than we're normally used to. Normally, global growth was always around 3%, but of course, this has also a base effect because of the negative growth we had in 2020. But at least we are happy that we are able to register positive growth, and then we expect at the global level again this growth to continue by 4.4 in 2022. The caveat I want to put in here is that these numbers are based on the World Economic Outlook by the IMF that was released in January 2022. So with the Russia-Ukraine crisis, and normally the IMF revises or releases another World Economic Outlook in April. So we expect that the numbers to be released in April might be different from what we got in January, because we've already seen commodity prices really increasing sharply in the last 3 months, so since the Russia invasion of Ukraine. So the numbers we are showing here are linked to the to the World Economic Outlook released in January. And as we show in the outlook, we expect to see new numbers, whether at global level and even at national level, as we continue to understand better the impact of the current crisis. So the growth of the economy globally is also linked to performance of the commodity prices across the world. So as you see in 2020, we had really big negative growth of most of the commodity prices. So the energy index reduced by 31.7% in 2020. If you remember, in fact, mid-2020, the barrel of oil, I think, had gone to around 30 or below $30 US dollars. But this increased sharply in 2022 as the economies were opening up, and with challenges, we had challenges also of logistics across the world. So we saw prices of commodities increasing mainly because of the big demand that came up as the economies were recovering during 2020, and this was also linked to the logistical challenges across the transport corridors globally. As I said, and this was across all the commodities, so energy, non-energy, and food also big increase last year. But linked to the current crisis in Russia-Ukraine, there has been again a push on the commodity, especially mainly 3 commodities. Oil is number 1, as you've all been monitoring. I think oil today is gone to more than 110 US dollars per barrel, and this is coming from below 90 by end of last year. So there's been a big jump just in the last 2.5 months. And the same on the food side, we saw oil, cooking oil going up. We see wheat, especially that the big suppliers of global supply of wheat was Ukraine and Russia themselves. So this has put an impact, a big push on the food index, and the same with the fertilizers. So to countries like us that are heavily relying on agriculture, we expect to see an impact on that. So here we put numbers to show what is happening in the first 2 months of this year. So as we saw big increase of commodity prices in 2021, linked to the opening of the economies, but now the push we see at the beginning of this year is really linked to the new crisis we are facing at the global level. So these increase in commodity prices are reflected in inflation. So 2021, we saw global inflation increasing to 4.3%, and this is expected to increase further to 4.8% this year. As I said again, this is linked to the January numbers, so we expect this one to really be affected or to change in the April numbers when they are released. Now coming to the domestic economic performance, as you heard from the numbers released by the Institute of Statistics and the Ministry of Finance, I think 2 weeks ago, we saw a big recovery of our economy in 2021 to 10.9% growth compared to a decline of 3.4% we had registered in 2020. As I said, this is also linked to the recovery we see across the world and the quick turnaround within our economy itself as vaccines were rolled out quickly, so we're able to open up the economy ahead of time. So despite the disruptions we had during the course of the year, I think we had 2 mini lockdowns during the course of 2021, but we had really gotten used to living with the pandemic, and so we're happy that we saw the economy recovering. This gives breakdown of the drivers of this growth we saw last year. As you can see, all the subsectors or all the sectors of the economy registered big growth. In fact, despite the fact that the service sector hasn't fully recovered, we know that tourism hasn't fully recovered, but at least the performance in 2021 was big compared to almost zero performance in 2020. So that's why you see big growth in service sector, but we see trade, communication, financial services really continuing to grow and recovering to pre-pandemic levels. So this strong growth across all the sectors contributed to the 10.9% growth in the economy. As I said, while we see challenges today, but the fact that we've been able to recover quickly from the COVID crisis that was much, much bigger than we expect from the current crisis should give us hope that going forward we see good performance. I'll come back to that when I reach the sector on the outlook. Looking at the external sector performance linked to the big recovery in the global economy, increasing global demand, and also the recovery in our economy itself, we saw exports really exponentially increasing during the course of 2021. But always this growth also has that base effect because it's coming from a negative growth or a reduction of a big magnitude at 21% in 2020. So, but this is a good indication that the sectors that are export-oriented were able to recover quickly, of course linked to the increase in commodity prices as well. Imports also increased. Imports were driven mainly by the opening up of the economy. As you saw, manufacturing, agriculture increased, and this also pushes up our import bill because most of our raw materials are imported from outside the country. When you look at the details of the growth in the import bill, intermediate goods and capital goods contributed a bigger share than the consumer goods. This is linked to the opening up of the manufacturing sector and investments in different sectors. Same with the exports. Again, exports also, we saw growth in all subsectors of exports. We saw traditional export, that's minerals and agriculture, tea and coffee, increased, linked to commodity prices, international commodity prices. We saw non-traditional exports. This is mainly exports of manufactured goods, also increasing, linked to the increase in manufacturing of the manufacturing sector. And then the re-exports, because we again reopening up of the borders with our neighboring countries, especially Congo, the main consumer of our exports. That also contributed a big increase in re-exports during last year. So with these developments, we saw a lower depreciation of the Rwandan franc because we saw a big increase in export earnings, though we had similar increase in imports, but at least the good performance of our export sector, and also we saw good increase in remittances. The details are in the big document itself, so that contributed to lower depreciation of our franc compared to the dollar. I think this is the lowest we've registered over the last 5 years. Now, on the monetary policy side, as you all understand, we maintained an accommodative monetary policy since April 2020. When the pandemic hit, we took a decision to reduce our policy rate at that time from 5 to 4.5, and that supported reduction in other interest rates, starting with the short-term rates, the interbank rates, that reduced from 5.35 in 2020 on average to 5.18 in 2021. But as challenges of inflation arose at the beginning of this year, again, as you heard in our communique after the Monetary Policy Committee meeting, I think about 3 weeks ago, we had to increase the policy rate again. So we had to increase the policy rate from 4.5 to 5%. And this had an impact on the short-term interest rates. Immediately, we saw increase in the interbank rate from the 5.18 average in 2021 to 5.51 average over the last 3 months. So what this means is as we increase the policy rate, we expect it was slightly tightening, and again, the good thing is the increase in the money market rate or the interbank rate is still within our band, and this is an indication of the price of money within the banking industry that is in line with the policy decision that we took in February. So linked to the movements in the policy rate and the short-term rate, we saw also movements in the long-term rates. The lending rates, we saw them reducing to 16.18% in 2021 from 16.35%. And this is on average. I know somebody seated here might have borrowed at 18% and would question how we are saying that interest rates are at 16.18%. So this is on average over the course of the year and for all borrowers. So some are able to borrow at 14%, others are still borrowing at 18%, depending on the risk assessment done by the financial institutions. Then monetary aggregates, of course, is expected to grow in line with the performance of the economy. We see this increasing as well. I think what's important is the credit to the private sector that we see increasing both in 2020 and 2021. This indicates the financing of the banking industry to the private sector that contributed to the growth we saw in services and in manufacturing mainly. The growth in credit to the private sector is also linked to the growth in new authorized loans. Last year we saw a big increase of 15.4% of new authorized loans going to the private sector compared to a reduction we had seen in 2020, which was linked to the subdued economic activities. Here we are giving sectors that were main consumers of this increased new loans to the private sector. We see commerce taking the lion's share, then public works and buildings, and personal loans and manufacturing. Manufacturing has been a sector that is picking up of recent, and we've seen it really performing well over the past 3 to 4 years, which is a good indication of the growth of our industry. So inflation developments, as I said, today we are in an inflationary situation, but we should remember that last year we were in a more or less deflationary situation. So because the average inflation rate last year was 0.8%, in fact during the mid of the year we saw deflationary tendencies. I think for about 3 months or so, inflation was below 0. And so this has risen just over the last 2 months. January it had increased to 4.3%. That was year on year, January 2022 compared to January 2021. And we saw an increase again in February 2022. So this is linked to mainly 2 factors. One was bad agriculture performance in season A. So when you look at the details, I don't know if I have it here. Yes. So the details here show you the pressures, where the pressures are coming from. We had very good performance of agriculture sector in 2021, as you saw in the real GDP numbers. But at the beginning of this year, that's season A, wasn't that good, and so we saw food inflation going up. And food inflation is a big contributor to the overall inflation because its weight in the basket, in the CPI basket, is big. So the negative one you see in 2021 had again a big impact on the 0.8% average overall inflation we saw in the country. So this big increase of food inflation at the beginning of the year had again an impact on what we see. But again, as you can see, we had increase of inflation, increase in all subcomponents of our inflation, whether core inflation, whether energy inflation. And energy inflation is not just driven by the oil prices that you see going up globally, with also the charcoal. Charcoal was also another contributor to this inflation. We see here charcoal prices increasing. And then core inflation is increasing, mainly linked to 2 factors. The food inflation that we see globally contributes to that. I think we also saw, it's mainly that the import component of our core inflation has been going up since towards the end of last year and beginning of this year, so that is driving our core inflation. Now, when we come to the outlook of the economy in general, so despite all this, when you look at the different fundamentals, we expect to see the economic recovery to continue. At least when you look at the crisis, the Ukraine crisis, the Russia-Ukraine crisis today, while it's sucking in a lot of global factors, economic factors, but it's not as bad as we had with COVID and with the the growth factors we already see driving performance in 2021, we expect the economy to continue growing. We are working with the different players, means of finance, the lead here, so we expect to release a new projection for this year. I think at the beginning of this year, we had a projection of the growth of around 7.2%. So this may be revised based on the different factors, but we expect still to see good positive performance of the economy in general for 2022. Then, as I said, inflation was mainly driven by what we saw in the first 2 months, mainly food and the other imported factors. But linked on what we see globally, we expect to see more inflationary pressure than we had projected at the beginning of this year. And as we are saying here, the Monetary Policy Committee will continue to monitor what is happening, and we're ready to take a decision to deal with the inflationary pressures to maintain it within our band. Our band is between 2% and 8%. And it's not only the central bank that is monitoring this. I think recently you had the press conference by the Prime Minister outlining different action the government has been taking to ease the impact of these crises on the population, on the economy. So again, there is concerted efforts. We have a team that brings together different actors, private actors and government institutions and private sector to see what needs to be done to mitigate the impact of the current crisis. So what I can say, we expect to see pressures, but again, as a central bank, we play our part, but we are happy that government, as too was done during the COVID crisis, is also playing their part, and we expect the impact to be minimal or to be manageable. So that concludes the part on the economic and monetary policy review. So we move on to the financial stability part of this presentation. And I start with a slide that shows the link between the real sector, the economic performance, and the financial sector. So as you see, there's been good performance in the financial sector that is linked to the recovery we see in the economy itself. So the real economic growth, of course, as the economy was picking up, we saw more economic actors or business people, businesses resuming, and therefore they're able to take up more loans and insurance products. That contributes to the growth of the financial sector as well. But also the challenges we had of suspended loans because of the COVID challenges, cash inflows restrained by the different measures taken. With the opening of the economy and with the strengthening of the economy, borrowers are now able to service their loans, again, as you see in the slides to follow. So that has positive impact on the financial sector performance. On the fiscal side, government is a key, maybe the biggest consumer in this economy. And so as the economy is opening up, as government activities are increasing, so government is able to inject liquidity and to create businesses within the private sector that at the end supports the business of the financial institutions. On the monetary policy side, the accommodative monetary policy that we had, were able to support liquidity within the banking industry. And so, again, the reduced interest rates, so this allowed stable efficiency within the financial institutions, but also stable interest rates. The external sector opening up and the increases we see in whether imports or exports, that's business to the financial institutions, whether insurance or the banking sector. So increased external trade increases automatically businesses within the financial institutions. And again, we see more inflows in terms of resources. So that was really to bridge, to show how, as we come from the economic performance, what does it mean to the financial stability and growth we are talking about here. So this graph shows the performance of our financial sector over the last 5 years, and I think it's good to know that has been really increasing as a share of GDP. The percentage of share of GDP shows how, one, the growth of the financial sector itself, but also shows how our economy is being monetized from really subsistence or informal to formal. And this is positive in terms of long-term growth of any economy. So the fact that the assets of the financial sector have been increasing vis-a-vis the GDP is a positive sign. Here we give the components of the financial sector. As you can see, the banking industry remains the giant subsector of the financial sector, reducing slightly between 2020 and 2021 from 68 to 67.2%. And that slight reduction is benefited or eaten up by, again, slight increase in pension sector. Both public and private pension increases slightly, while MFIs and insurance remains constant as a share of our financial sector. So the banking industry is the biggest, but also the most connected sector across all the financial institutions. So that means a lot to us as regulators of the financial sector. So the focus and the attention we give to the banking industry is not just about the banks, but it's also across the stability of the other components of the financial sector. Now, looking at the specific subsectors, how they performed, and the drivers of this growth. So the banking industry increased by, the assets increasing by 17.5%. And this is driven mainly by growth of the deposits, and the deposits linked to the good performance of the economy. But also we saw injection of capital from the shareholders. And again, as you remember, we advised to retain all the profits earned in 2020, and it was good profit, as you see in the next slide. So all this was retained within the financial institution, and this gave both the MFIs and the banks bigger capacity to on-lend the resources they mobilized from the depositors and from their shareholders. So this grew their assets and allowed them to contribute more to the growth of the private sector and the economy in general. Again, these are other subsectors of the financial sector, and we see all of them registering positive growth. The pension sector mainly grew by increase in contributions and investment income. Insurance sector supported mainly by injection of capital and investment income, again increasing and retained, and the same with non-bank financial institutions. These are mainly lending, non-deposit taking financial institutions and the others like the forex bureaus and that. So at least the story here is that we saw growth in assets across all the subsectors of our financial sector. That is in 2021, which is linked to the good performance of the economy. While we talk of the growth, we as regulators, our main concern and interest is on the stability. So this slide shows that our banking sector is really stable and sound. And when we say stability, we base on two main factors and the third indicator. So we really track the capital adequacy ratio, how well capitalized are the financial institutions. Now here talking about the banks, how they well capitalized vis-a-vis the risks they're taking on. And the good thing is that, as you see, in the last 3 years, they've remained strongly capitalized with that capital adequacy ratio above 20%, with the minimum required of 15%. So this is a strong indicator that they are stable. And this, as we see on the maybe talking about the NPLs here, at 4.6% by end of 2021 and remaining below the 5% benchmark that we've given ourselves for 3 years, which is positive. But we see big write-offs. We see big provisions linked to, as you see, watch category loans. So normally that would shake the capital base or the profitability of the banking industry. But the good thing is that they are able to absorb these write-off, written-off loans and the increased provisions and remain with a strong capital base linked to the, as I said, retention of the profits and increase in capital injections. Then again, liquidity is another indicator that we track, that is a prudential requirement. This also remains very healthy. The minimum required at 100%, but we see the LCL, this is short-term liquidity that we want to see every bank well liquid at any time, any depositor wanting to take out their money, they should be able to receive it instantly. And this remains healthy as well. So generally speaking, the stability of our financial, of our banking industry in this particular case is very strong. These are just other additional indicators. I think the key ones are the ones on the top. So as I said, when you look at the profitability that contributed to the strength of the capital base, the big chunk of these profits made in 2019 and in 2020 were retained within the banking industry, and this really contributed positively to the capacity of the banks to lend to businesses or to investors. And again, the positive development here, or the positive story here, is that we see our profitability as a return on equity, as a measure by the return on equity, has been increasing, and we're almost now comparable, almost, to our peers in the region at 15% as return on equity within our banking industry. As you can see, Kenya has been really high for quite some time. In fact, a few years ago, they were around 24% before the rate cap, so at 19.8%, and at least we are now comparable to Uganda. So this is a positive development that shows that our banking industry is attractive to investors since its return on investment is now healthy. So I talked about the health of our loan portfolio. So happy that the non-performing loans have been, as a ratio of the total loans, have been increasing and has been kept below 5% over the last 3 years. But as you can see in the bars, the actual nominal amounts have been increasing. So at least from 2019, this has been increasing, and that is a concern to us. Similar to loans in the watch category, these are loans that have missed, I think, one payment, and so these are loans that, but I think this mainly, the main contributor to this increased share of loans in the watch category are loans that are still in the moratorium. So they are loans that were restructured for COVID purposes, and they are given long, long periods for in the moratorium. And these are kept in the watch category. So we hope as the economy is opening up, this should be clear or reduced in the next 1 year or so, but this remains a concern to us. But again, as I said, the good thing that gives us comfort is the performance on the profitability, despite the increased provisions linked to this watch category, also to the write-offs. There's been, this capital base remains strong and profitability remains strong, but still, this has to be addressed, and that we are working with the banking industry closely on this. MFIs, similar story on the stability indicators. The capital adequacy ratio is strong, above 25% for all categories of the microfinance institutions are strong in their capital adequacy ratio, in their liquidity ratio. NPL has been reducing over the last 3 years almost for all categories again. And we see profitability also increasing, so the microfinance sector is also performing quite well. We have some issues with the Umurenge SACCOs. Some Umurenge SACCOs, these are gross numbers, but we are working with the government again to deal with the challenges on Umurenge SACCOs as we are working to consolidate the SACCOs, so we expect that that will resolve the issues of some of the institutions we see having challenges in terms of the indicator, their stability indicators. This is a summary of the insurance sector, which is also on the solvency margin, remains strong, above the 100% minimum requirement. These are also now the stability indicators. So when we are tracking what is happening with the insurance sector, these are the stability indicators we track. The solvency margin shows the capital base vis-a-vis the risks they're taking on. And the liquidity ratio, they are not meeting the minimum requirement, but this we've been seeing increase in that. And the good thing, we've also been seeing increase in profitability of the insurance institutions, though they are still making underwriting losses, but that loss has been reducing over the last 5 years. And we see at least the upper line, that is profitability itself, when you consider the investment income, that has also been increasing. And so while they are not doing well in terms of the liquidity ratio below the benchmark or the prudential requirement, we think we are on the right track to achieve this. Same with the combined ratio. We still see this is an indicative ratio on their efficiency in terms of the cost ratio and the claims ratio. These are still high also vis-a-vis the benchmark that we track of 30 and for expenses and 60% for claims. But as we say, there's a very big improvement. And these are private insurers. For the public insurers, we don't have any problem. Both RSSB Medical and MMI, these are very strong with very good numbers. So what we show here and what we track closely are the private insurers. As I said, we've seen a lot of positive developments over the last 3 to 4 years. So on the pension side, we just showed the breakdown of the pension. We have one RSSB, which is the giant in the household pension. And we have, since 2015, we opened up to private pension schemes. This has grown to 12 private pension institutions. And one Ejoheza, it's part of RSSB in terms of management, but in terms of products, it's different from the normal pension fund managed by the RSSB. So we track it separately. And the numbers on the other side that are interesting is showing the subscribers of these pension schemes. So as you know, the main RSSB pension fund is for salaried workers, former salaried workers, at 587 last year. The slight reduction between 2020 and the 2021, I think, was because of there were many temporary workers employed for the school construction projects that were massive in 2020, so that increased the contributors. So that's why you see, and when these projects ended, so it reduced on the contributors. That's mainly the difference between 2020 and 2021 for RSSB. But I think the interesting story here is on the Ejoheza that has seen big improvement in the pensioners contributing to this fund from 531 in 2020 to 1.4, more than almost triple in 1 year. And this is, as you can see again, 3 times those under RSSB, main RSSB pension fund. So while the amounts are not that big, but at least we have now more Rwandans being able to contribute to their pension savings, which was really the main objective of the LTSSS, or Ejohezas. So again, on the private pension, we've also been seeing the contributors increasing from 51 to 66 now. So these are positive developments in terms of protecting Rwandans when they're old. So down are the beneficiaries of disbursements during the last 2 years. Now, the last part of this presentation is on the payment system that we also oversee. This slide shows developments in the payment systems, and when you look at the first graph in terms of the subscribers, there hasn't been really big increase between 2017 and 2021. That's 5 years in terms of the number of subscribers in the mobile payment and the mobile banking. But when you look at the number of transactions, the next graph, there's been exponential increase in the number of transactions, especially on the mobile payment side. So it's more than really tripled in 5 years between 2017 and 2021 in terms of the number of transactions. But when you go to amounts, it's even much bigger. It's increasing from below 2 trillion in 2017 to more than 10 trillion in 2021. And this is because, one, more people are aware of the benefits of using digital channels, but also different products are coming on board that attract use of these digital channels. And of course, COVID restrictions and people fearing cash also contributed to the big increase you see in 2020 and 2021. On internet banking, where in terms of the subscribers and the number of transactions are almost negligible, but at least when you see the amount, and this also indicates that more corporates are now using internet banking, and this gives a good picture of the trend of our cashless journey. This is linked to what we've just seen in terms of the value of transactions as a percentage of GDP. This has been increasing every year, and we've gone above the 100% mark for last year, 2020. Some details here to show behavior and trends in use of especially the mobile financial services or mobile payments, because it's the biggest used product in the digital channels. Here, this is just to show how price sensitive the population is. As you see, the graph, I don't know whether that is gold or something like that. The line, so when MTN, which is the main contributor to merchant payments, reintroduced the fee in September, as you can see, there was a sharp drop between August and September in terms of the value of transactions on merchant, which is P2B, that is person to business. That's mainly the contributor to this line going down in September, but at least has remained stable, and we saw a slight increase towards December. And as we said, that price sensitivity at times is also to lack of understanding on the benefits of these digital products. So we working with the different government institutions and the private sector or the service providers to educate the population, especially the merchants, that paying 0.5% of 500 francs for a transaction of 10,000 shouldn't really stop you from using these smart channels of transacting. Again, this is also speaks to the same story that we see big increases in digital transactions. Both graphs show that there's more money coming into the ecosystem than is leaving the ecosystem. So the first graph on the left is cash in and cash out. So the graph up is cash in, at which we see more money coming into the ecosystem than money leaving the ecosystem, which is the yellow or orange line that you see. So again, similar to the other graph on the other side, the bank to wallet and wallet to bank, we see more money coming into the bank than leaving the bank to the wallet. And again, in July, when we removed the fees for bank to wallet and wallet to bank, you see how the amounts transacted there increased and continue to increase going forward. So briefly, that's the story on the payment system, positive developments on the digital channels, but more on education of people understanding the benefits of using these digital channels, even when there's some fee that you have to pay to benefit from the use of the channels. So in conclusion, again, the outlook on the financial sector, we expect the supervised institutions to remain strong and stable because, as I said, as you saw in the presentation, they hold sufficient capital and the liquidity buffers are really sound. Reopening of the economy continues to support these measures. So while there are expected risks linked to the current global crisis, but there isn't direct hit as we saw in linked to COVID, but still we are monitoring. Normally we request the financial institution to do their own assessment vis-a-vis their customers who might be hit by the current crisis. And so we are working with the financial institutions again to address any such challenges. So I don't know whether I will say briefly or in detail. That's what we had to present to you this morning, and I'm happy to receive questions. Thank you.
Thank you, Honorable Governor, for your presentation. Another round of applause for presentation. Just a few takeaways from the governor's presentation. As he mentioned, the domestic economy recovery is expected to continue in 2022. And we saw in the last slide that the financial sector is expected to remain stable and sound. Thank you so much. Without any delay, we are moving on to our next session, which is the Q&A session. And joining the governor this morning is the Deputy Governor of the National Bank of Rwanda, and also the Chief Economist, as well as the Executive Director of the Financial Stability at the National Bank of Rwanda. If you have questions, feel free. We have a team in the room with mics. You can raise up your hand and the team will be there, or feel free to send them through Slido. They'll be able to project a QR code. You can, even there are some questions that have started coming in. You can send in questions and we'll be able to address them to our panelists this morning. Muri uyu mwanya tugiye kwakira ibibazo bitandukanye. Dufite abantu hano bafite indangururamajwi bashobora kuza kudufasha muri icyo gikorwa. But before that, as people think about these questions, I just have one question for Governor. As you mentioned, we continue to see the Ukraine-Russia war affecting different economies around the world. Can you please elaborate more on how it may affect our economy here in Rwanda?
Yeah, thank you, Bob. I think I touched on that during the presentation. I think I gave three main channels of that would. It's mainly one through inflation, and two, the impact on the global financial system, as we see sanctions against Russia that might affect the global. So though Russia is not a really big player globally, but still it might have an impact on the global financial system. And then, generally speaking, war is war, and we see the West fully engaged in this, so resources diverted from development to finance the war. That will also affect the global economy itself, its performance. And when I say commodity prices, I think I mentioned three main commodities. That's oil, because Russia was a big contributor to this. There's gas as well. When you say oil, it's gas should be part of that. Fertilizers, that to us is a key concern as an agricultural country. I know there are efforts already to look at alternative sources of this. Same with wheat. I think wheat is another big product that has been coming from Russia and Ukraine. I think combined for Rwanda, I think we've been importing almost 60% of our wheat from the two countries. So that will have an immediate impact as the importers or working with the government institutions are looking at alternative channels. We expect to see an impact from that angle. So mainly for us, we see those are the channels that this is likely to affect us. But again, I have my colleagues here. I'll be happy to welcome them to add to that. Chief Economist.
Yeah, thank you.
Thank you, Governor. I think if I can just add a few more details on that. Governor explained the two free main channels. Through inflation is going to come from the main direct impact is on energy prices. We know that Russia and Ukraine together produce 12% of the world's oil and 17% of its natural gas. So you can see that the impact is on global, it's a global impact. You can see a lot of countries, people are starting to feel an increase in the pump price. It is not yet the case in Rwanda, but I mean, the direct impact will be from oil, and you know that when fuel increases, some other commodities follow. So the other thing is on imports of wheat and fertilizers. This represents around 64% of total import of this product for wheat and 14% for fertilizers. So possibly impact would come also from these important inputs to our food production. So we see basically the current war in Ukraine having some economic consequences, and the sanctions to Russia having some possible consequences to our economy through upside risks and inflation. When we talk about also increased energy prices, this means increased value for our imports, so we are likely to see an impact on our external sector. But what is important to note also is that the central bank is having a comfortable level of reserves. As of December 2021, we are having reserves in Forex that are able to cover 5.3 months of import. So that should be, that's a comfortable level to absorb this shock. But this is something we are really looking at and monitoring. So the main impact is on inflation and on the external sector. Thank you.
Thank you, Chief Economist. Thank you so much, Governor. I will open up to our audience, and we'll come back. We have questions that are coming in. Keep those questions coming in, but we want to open it up to the audience. If you have any questions, you can just raise up your hand, and someone on the room will bring a mic to you. You can say your name and who you're addressing the question to. And yes, there is someone with a question here. Yes, if we could have a mic. Thank you. your name and who you're addressing your question to.
Thank you, Honorable Governor. Vianney Gasana from Rwanda Forex Bureau Association. I have noticed the good performance of the banking sector, where we have seen their performance was coming as a result of interest income, commissions, and other areas. But my concern is that if not well monitored, there's some kind of I don't want to use the abuse. The question is, we have been experiencing some kind of things that are not yet well monitored. If I say in terms of commissions, most of the banks, they charge some bills, like 50 notes. They will say these are small bills. And we have been trying to show our concerns from different capacities. But as of today, we need to know exactly, as National Bank of Rwanda, where do we get this kind of telling us that this 50 note is a small bill? And yet, from the sector, mostly from the forex bureaus, if a client comes in with 50 note, we buy it as a 100 note. At the same time, if I deposit this money to the bank, they tell me this is a small bill, and they start charging that bill. We would like to know exactly what triggers this kind of, if I call it a manipulation, from the market. And eventually, this will lead some people of ignoring or declining to deposit some money into the banks. Because people, they fear to get for that kind of charges. More so, there is a tendency of charges being imposed on withdrawals and deposits. As a National Bank of Rwanda, we would like to know exactly what is the gap between the banking sector and the regulator. At the same time, even the private sector, people are suffering, are complaining, but we haven't yet got the real situation. And this thing has been complained several times.
Thank you.
Lastly, if I would say, take another example, we need to have a policy which is well elaborated, like these small bills. Say we have some investors, or foreigners, or tourists. They came in with these small bills, and they call it dollars. And if they come to my office, please, this is a dollar. Why do you tell me this is a small bill? Yet we know exactly this is a dollar. So we need to have from the regulator and from other players in the sector that we can come up with a concrete solution on this note. Thank you.
Thank you so much. Thank you so much, Sana. We can take two more questions. There was a question at the front here.
Thank you so much for the floor. Good morning to everyone. And I want to congratulate the Governor of Benin for the good presentation he has made to us. I have 3 questions. One goes with the cost of private insurance increasing. Dear Governor, the citizens of Rwanda is expecting to get the support of the National Bank when it comes to prices balance, and yet the prices of private insurance has increased when the traffic police is reporting the significant diminution of the accidents. So what the support are you ensuring as a National Bank? What is the support are you ensuring to the citizens of Rwanda? Second question goes with the risk of credit. What is the measures of the National Bank to stop or guarantee the diminution of that risk when the clients of bank are controlling or managing their loans on their own without the communication or the collaboration with the banks who helps them to get those loans?
Thank you.
Third question goes
Let's be brief.
with the stability the stability of monetary, which is one of the main responsibility of the bank. But we have seen prices of commodities almost doubling within 2 weeks after the crisis of Russia and Ukraine. So what is the security the BNL is granting to the population of Rwanda when we face those kind of inflation within just a small time of period like that? Thank you.
Thank you so much. We'll just take one last one, brief, straight to the point. All right, we can, yes, there is a question. Your name and a brief.
Thank you, Honorable Governor. Jonas Munyuranga from the Ministry of Trade and Industry. In the previous, presentation last year's, I think there's a word that wasn't missing in the presentation, which is made in Rwanda. And given the experience we've had of COVID and the support from the locally manufactured product, as well as the crisis that we are still having from the Russia-Ukraine war, I would like to understand from the central bank perspective, how have you seen the Made in Rwanda progressing, and to which extent should we again see more locally solutions to address these shocks as a homegrown solution to this extent? Thank you.
Thank you so much. I think we'll take those. Thank you.
Yeah, thank you. I think we share the questions among ourselves, and we have also industrial players in the room. I'll be happy to hear their comments on some of the questions as well. Gasana, I think your question on the issues of charges and on Forex, one on small denominations, two on deposit and withdrawals, I think we've discussed that internally. I don't know if we agreed as solutions. Some of the things we don't really regulate pricing of services offered by the financial sector, except when it is a negative charge, though it's not easy really to define that. But I think, for example, on the deposit and withdraw, I think that's something that we are looking at. That's maybe Gerard is in here, may make a comment on that, our director responsible for protection of consumers of financial services. But like charges or commissions on small denominations, the explanation is that these are denominations they have to export because banks don't really deal with cash US dollars. They deal with the transfers. So when they receive these deposits, in most cases they have to export it to where it is used as cash. And so there are costs related to that, to this export of cash to outside the country. So whether $50 note is considered as a small or big note, maybe that's something that is difficult to discuss here. But I know we've had discussions around this, and where we see that it's a service offered by the bank, and it's not it's not really a prohibitive charge as such. I think we don't have the powers to regulate pricing of financial services. But I'll request Gerard, if he's here, or my colleagues, if any, can make a comment on that. The other question, I think, you didn't introduce yourself. I would assume you're an honorable senator. I don't know if you don't mind, you would introduce yourself to gusubize tuzi udusubiza.
Sorry for not having done it before. My name is Alexis Mugisha. I'm one of the 6 senators composing the Commission of Economic Development and Finance.
Thank you. So on your questions on insurance, one is on that factor that I said we don't regulate prices of financial products. But on insurance, because there are issues within the pricing of insurance products, we had to come in as a central bank and request a scientific study that is called actuarial study to assess the cost of services given by these, offered by our insurance sector, mainly on the motor side, because there was a lot of negative competition, undercutting. I think during my presentation I said we see improvement in the insurance sectors since about 5 years now, because by 2017 they were making losses. If nothing wasn't done by then, I don't think we'd have an insurance sector standing in our country, and that would be detrimental to the growth of our economy and stability of the economy itself. So we need an insurance sector working that is able to insure risks of different economic actors. So we are responsible as a regulator to ensure that stability. And this price undercutting was threatening stability of the insurance sector. So we had to commission a study, and the study indicated what should be done as proper pricing of motor products or motor insurance products. So that was the basis of increasing these products. Wasn't really increased as it had indicated. That's why, as I said, if you look at the detailed report, they are still making underwriting losses. We are concerned as a regulator that the main business of insurance companies is underwriting risks, and they are still making losses on this main business, though they are able to recover from investing these the resources. So, and the increases that we saw in 2018 linked to motor insurance was linked to this study. We did another study. We are still discussing with and the study is not just about the pricing. What they showed was there were other things that had to be done by government to address the issue of high claims that were a challenge. To your question, Honorable, on the level of accidents, unfortunately, when you look at the numbers, the accident didn't reduce as such. So the fatal accidents reduced, but the number of accidents in general, because of the rush hours in the curfew time last year, increased. And funny enough, in fact, when you look at the claims last year, claims linked to motor insurance increased compared to what we had in the years before. Though the fatal accidents reduced, but still claims increased. So while we are working on the proper pricing and efficiency of the insurance sector, it will be difficult to say that we come in as regulator or as government and start instructing the insurance sector on how they should price the products, because that wouldn't be done scientifically, and would just lead to the challenges that we are avoiding of destroying the insurance sector itself. Like the issue that has been making a lot of noise on motor insurance and motorcycle insurance. These are the most risky products in the insurance industry today. And because of the high cost links to it, most of the insurance companies have stopped insuring motorcycles. And the one company that agreed to continue taking the risks had to increase the prices linked to the level of the risk. There was a lot of noise around this. And what we request policymakers is to look at the two coins, look at the risks associated to motorcycles and address that. That will lead to reduction in the cost of insurance. I didn't get quite well the question on the loans and how they are managed between the borrowers and the banks. I don't know if my colleagues, maybe PCU. So maybe Senator, I would request you to repeat that. Now on inflation, maybe I will let the chief economist talk into that. So then the question from Jonah, I'm happy to have a key promoter of Made in Rwanda on this panel, and I would request her to answer your question. So maybe let's start with that yes, please. Let's first get a clarification on that.
Thank you, Governor. If I make myself clear, I mean the borrowers on the field of Rwanda manage the loans on their behalf. They make their self-arrangement in using the loans they get from banks. And the bank waits the moment the client falls in loss and come to take all what is considered as properties of the clients to get paid. So I was asking, what is the measures that the BNR as a regulator has in terms of reducing or stopping that risk of loans? Thank you.
Okay, so let's, thank you, Honorable. So let's hear from my colleagues. Deputy Governor.
Thank you, Honorable Governor. I'll take the question on the Made in Rwanda and how it's faring. I think in the presentation, we would look on the economic contribution of the manufacturing sector to our GDP growth last year, where you see that the manufacturing sector is actually the one that grew the most in 2021 after construction, with a growth of 10.6% versus a slight growth of 2% in 2020. And this was driven mainly by construction materials. And then construction materials at a double-digit growth, 10%, and then textile at 15.6% growth. And you also have a growth of 7% for food processing. So yes, it's true, we don't particularly emphasize on Made in Rwanda in this monetary policy and financial stability statement, but I think going through one, the contribution of the manufacturing sector to our economic growth. Second, you've seen also that manufacturing is now among the top 4 sectors that were financed by our banking sector. Thirdly, I think in other forums, there are research that we've conducted specifically on manufacturing, which addresses the Made in Rwanda. One was on the access to finance constraints to manufacturing companies, which was presented to the Manufacturing Acceleration Committee, which is composed of different government agencies. And we also have in the pipeline another research that will be done for the next financial year, if I'm not mistaken, on evaluating where we stand in the execution of the Made in Rwanda policy versus the targets that we had in the, for instance, the domestic domestic market recapturing strategy. So that also will be shared probably in other forums than the MPFSS, but that's what I can say on when we look at the contribution of the progress of the Made in Rwanda policy through those data on manufacturing, local manufacturing. Thank you.
Thank you, DG. Chief Economist.
Thank you, Governor. Just to complement what DG just explained on Made in Rwanda, another thing that we look at as indicators for the performance of Made in Rwanda is on exports of non-traditional products. So non-traditional products are things that are not coffee, tea, minerals, just to be simple. Non-traditional exports last year, 2021, the growth was 56.7%, which was very high. I can cite a few products like the category of cereals, flours, and cooking products. This is plus 150% compared to 2020. Products of the milling industry plus 13%. Construction materials, which includes production of cement, iron, steel, etc., exports increased by 56.6%. So that just to complement. On the question by another senator on the monetary policy and price increase, especially in Jan and Feb, as Governor explained, the drivers of this inflation we are seeing now, or we've seen with the numbers of January and February, are mainly coming from 2 things. The season A, agriculture production, which was not that good, that increased the food products, and imported products that were part of our core inflation, sugar, cooking oil, and energy products like gas and fuel, but that were coming from the increase we've seen since 2021. So basically, global commodity prices have increased in 2021 because of the mismatch between global supply and global demand. As there were restrictions on the production, at the same time, the demand increased in advanced economies because people were receiving money from government as support for COVID. So this drove all these prices up. This is even before the Russia and Ukraine war. So we cannot really say that January and Feb inflation is driven by the Russia and Ukraine war. No, it is driven by this imported inflation that is coming, that already started since the end of 2021. But because it takes a lag for it to be reflected in our markets, it happens to be that the moment price increase was the moment the war started. So that's on the drivers of inflation. But this was anticipated already in February. Before the war, the central bank was forecasting inflation to increase, mainly because of these pressures. So as a decision, the Monetary Policy Committee increased the central bank rate from 4.5 to 5% mid-February. This was an attempt to contain this inflation over this year. So what the central bank is doing, and the main tool is the central bank rate and monetary policy, impacting aggregate demand and trying to slow down inflation at a macro level. The central bank does not regulate individual prices, but we have the Ministry of Trade and a government institution like the Ministry of Trade that is actually looking at price price control, is there speculation, and these other aspects. The central bank is really focusing on monetary policy to reduce pressures at the macro level on inflation, which is something that we are going to keep monitoring and keep trying to do. Thank you.
Yeah, thank you. Peace.
Thank you, Governor. Yeah, thank you, Governor. I'll respond to, maybe just before I do so, I'll supplement on the question on insurance. I think, Honorable Senator, the question that you asked is actually a very valid one, and we're also very curious about the driver of the increased level of claims, which got us to actually start a conversation with the National Police, and just wanted to share a few numbers that we got from the police department on traffic accidents. Between 2020 and 2021, the number of accidents actually more than doubled from 4,160 recorded in 2020 to over 8,600 in 2021. And these were mainly accidents that were recorded during peak hours, rush hours, related to curfews and things like that. Yes, the number of fatalities, fatal accidents reduced from about 605 recorded in 2020 from 624 in 2020 to 605 in 2021. So very slight decrease. But I think what we found interesting is that the ratio of the accidents that were actually related to property damages, which is what insurers, which is one of the things that insurers also compensate, had actually increased to about 45% of those 8,000 accidents that had actually occurred in 2021. Incidentally, also the number of vehicles involved in those accidents, of course, also increased from about 6,300 in 2020 to over 14,500 in 2021. 25% of the vehicles involved in those accidents were actually motorcycles, related to the question that Governor, the comment Governor also made on the risks that are still existing on motorcycle insurance products. So I think it's an area that is of high concern, and even though the insurance premiums for motor vehicles have gone up, we are still having challenges in terms of the level of claims. Related to that also is the spare part index that we also monitor with the Association of Insurers, which also had gone up quite significantly in 2021. So as you would understand, as the price of spare parts goes up, that also has an implication on the value of compensation of these insurance premiums. So this is something that we continue to monitor, just supplementing on what Governor had shared. So on the second question, I think my interpretation of the question is the concern around loan monitoring. So banks, actually lending institutions, let's not just say banks, lending institutions disperse loans, and probably the level of the concern that you're raising is that the level of follow-up is very limited until the loan actually goes into default, and then you start the recovery process. And I think that it's a valid concern, and one that we also monitor very closely with lending institutions. So in terms, I think your question was around, what strategies, what measures do we have in place to deal with that issue? So it's an issue that we follow up, especially on our on-site inspections. So credit risk, as you would expect, is still the most significant risk that lending institutions sit with. I think lending represents about 54% of the total asset portfolio of both banks and microfinance. So when we go on site, we spend a lot of time actually reviewing credit files and looking at what kind of follow-up banks actually have in process with this. What I would say is the other measure that we use to follow up is actually requiring, I think that the requirement that we've put in place now to ensure that any facility that is overdue between 30 days and 90 days is classified as class 2 is also forcing the banks to actually do the relevant monitoring, because as you downgrade the facilities, the amount of provisioning that you're taking also increases. So that instinctively also pushes them to do their adequate monitoring to better manage the level of additional provisioning that goes on. Thank you.
Thank you, Governor. With your permission, can request that we take some questions online. If you could project some of the questions that are coming in online. We have Jean Bosco who said, you mentioned credit risk. I'm assuming is addressing this to the governor. You mentioned credit risk remaining a major risk for the banking sector. What sectors have the most NPLs, and what are you doing as regulators? Ange is asking, Chief Economist, can we know some of the strategy put in place to mitigate the persistent increase in prices of goods such as fuel and gas, to mention a few? And then we have Brice, who said, is BNR and other institutions plan to mobilize domestic financial resources wherever possible to face Ukraine crisis consequences? If yes, how? And then we have Godfrey, who says, now that DRC is a member of the EAC, what impact/benefit is it going to have on our economy? And yes, I think Brice shared other questions. You can keep them on the screen. Do you think it's time to reduce some of the expenditures which now may not be necessary, since we don't know how far this crisis will affect our country? So these are some of the questions that are coming in online. We have Alexius, who is asking, as we're promoting cashless economy, how can we do it? I think he wanted to say, what can we do to address the issue of bank charges, especially for foreign currencies that are very high? Thank you, Governor.
Yeah, thank you. Can you keep the questions on the screen?
Yes.
Yeah, I think the first question was on the sectors that have the highest levels of NPLs and what we are doing. I think, please, you handle that. The other question was directed to the Chief Economist. I'll leave that to you. Okay, same with the food. Again, it goes with inflation. Let's go up. Scroll up, please, the questions.
DRC.
Yes, the question on DRC, I think it's really a positive development. One, let me say, in two main folds. So DRC is a big country within the region, and so this widens the capital, I mean the market of the EAC, so in terms of attracting investments into the region, that adds to that factor that anybody wanting to invest in any of our countries will be looking at a bigger market as we add DRC. But again, as I said during the presentations, DRC is our main trading partner in terms of our regional partners. And so to us, opening it up further by admitting the country to EAC makes our trade between our two countries smoother than it has been before. So therefore, that's a big advantage to increase investment in Rwanda. But again, geographically, you find Rwanda positioned between the East African bloc. So we should be positioning ourselves to act as a gateway between the East African part of the EAC and the West African part of the EAC, which is DRC, a big market. Yeah, I'll see these are the main. It's really about the opening up and creating big opportunities for investments in Rwanda, targeting the ERC as a market, and removing all the barriers now for trade between our two countries. But again, I request my colleague, the Deputy Governor that has been in commerce and trade of recent to add to that. On reducing costs and all that, I want to leave that to the fiscal authority. We don't deal with that directly within the central bank, so I would want to leave that to the Minister of Finance and Government to handle. So let's hear it's maybe Chief, it's okay. Deputy Governor, you want to go first?
Thank you, Governor. Maybe to complement what Governor has just said on the impact of DRC being admitted in the ESC, I think I would add on two things. One is it's the impact on our own exports, and maybe going back to the Made in Rwanda products that are already being exported to be able to increase the volumes of exports, with DRC being a member of the customs union. Secondly is also on the financial services. As you know, as we are establishing Rwanda as a financial hub, especially to attract investments and investments not only for our own country, but being really a financial hub for the region. I think it's a very important aspect to that will be able also to cater for financial services investors in Rwanda that are interested in financing projects regionally. So the addition of an economy that has more than 80 million people is also another, I think, great impact that we see for our own economy. Thank you.
Thank you, Governor. I think if you can go back to the questions. Yes, there were two questions addressed to me, even though it's not really within the central bank, but let me comment, maybe add a few things on them. Strategies put in place to mitigate the persistent increase in prices of goods, especially fuel and gas. You know that fuel pump price is regulated by RURA, and lately also gas price. So this is because these are very important for the consumers, and fluctuations in these two commodities can really affect purchasing power of citizens. What is being put in place, as lately government already communicated on, is that there are subsidies, especially for fuel, that are in place that government is using to cushion or let's say to smoothen the increase in price that would come from the international prices. So that's something that is being reviewed every 2 months, and government through the Ministry of Trade, the Ministry of Infrastructure, and RURA is following up on this. Regarding agriculture, one comment I can say is not necessarily the low production. It's basically, the issue is more coming from the fact that our agriculture is dependent on weather conditions still. So as the Ministry of Agriculture and other institutions doing everything possible to reduce the impact of climate change on our agricultural production, this is how price fluctuations also will be addressed. So irrigation projects and other projects that lead to less reliance to weather shocks. That's the way in the future to have less fluctuation in prices coming from agricultural production. Thanks.
Yeah, on the question about credit risk, I would say that the 3 sectors that we see with the highest level of non-performing loans as at the end of December 2021 were top of the list commercial real estate that had an non-performing loan ratio of 19%, followed by public works with a non-performing loan ratio of 12.6%. And then trade with a non-performing loan ratio of 13.5%. I think that what we see is that in the public works subsector, the issue is not necessarily broad-based. It's a few borrowers that have that have not performed well in 2021, and a few large borrowers in the public works subsector that have dragged down that subsector altogether. Where we have some level of concern is on the commercial real estate, where we've seen a couple of properties across the country, mainly in Kigali, that have struggled. I think it was partially a pre-existing issue, pre-COVID, but that issue became, further exacerbated by the pandemic. So this is an area that we're working with. I think it's more than just what the regulator can do with regard to commercial real estate. It is an area that we're going to work with a cross-section of stakeholders, including both government and also the private sector, the banks themselves, to figure out, what needs to be done to support commercial real estate. I'm happy to note, the mayor of Kigali is here with us, and we will be looking to partnering with yourselves, mayors, as well as other stakeholders on this issue of commercial real estate. I think one of the other things that we have done pre-COVID was, because we were seeing a sort of build-up in the commercial real estate sector, we implemented in 2019, I believe, what we call the loan-to-value ratio, which requires that any investor in commercial real estate has to have some skin in the game, contributing at least 20% of the value of the property in its construction, so that we remove any moral hazard that might be happening in this space. And that also, I would say mainly that is what we've done pre-pandemic, but going forward we will be working with other stakeholders to deal with some of these emerging risks. Thank you.
Thank you so much, Peace. Governor, with your permission, we'll move on to the next session.
I don't know if there's, I hope there wasn't any burning question we're not able to take. So I see none. So I want to thank you and thank my colleagues for the contributions to answer the questions from the audience. As introduced by Bob at the beginning of this gathering, we have two functions in one. So we request your patience. We are moving to the next part of our meeting this morning, where we are going to launch what we call the web comparator. It's part of the consumer protection measures we are taking as a central bank. So it's a tool that will allow consumers to access pricing of financial products and be able to compare what's happening across financial institutions. So we start with a short demo on how this web comparator will be working. Then we'll have a panel. And I again want to thank our colleagues that have accepted to be part of the panel. It shouldn't take long, so I really want to invite you to bear with us for another not less than an hour to go through this important launch, because we thought this is the right audience through which we should launch this product. And then from there work with yourselves and the other financial institutions to educate the consumers to take advantage of this product. So we can move on to the next part again. Thank you.
All right. Thank you, Governor. A round of applause for our panelists as we invite them to take their seats. I'll ask the Deputy Governor to stay with us. And I'll also invite our moderator for this session, Ingrid Chuzuzo, and as she comes to the stage, I'll ask the team at the back to play us this video.
With global market practices for protecting. Have you ever wondered about the interest rates and prices of services offered from different banks? Or which bank offers the lowest annual percentage rate when you apply for a loan? Gereranya is a platform developed by the National Bank of Rwanda in a bid to ensure transparency and fair pricing of financial products and services within the financial sector, as well as complying with global market practices for protecting financial service consumers from being overcharged by financial service providers due to lack of information regarding prices of financial services and the related fees. Gereranya gives you information and comparison of different services offered at the commercial banks, such as loans, accounts, debit and credit cards, and e-banking services. An example of a common service at the bank, loan products. Click on the loan icon under the main service menu. It will give you all the loans offered in the commercial banks. Choose a type of loan and click on the compare icon of the loan you wish to compare. A list will appear with all the banks offering the specific type of loan, including other information such as interest rate and processing fees. Click on the estimate loan icon and select the type of entity that is requesting the loan if you are an individual or a corporate or MSME, micro, small and medium enterprise. Enter the amount you wish to take as a loan and the number of months you will take to pay the loan. The platform will generate a list of all the banks and list them from the lowest APR to the highest and give you estimated information on average interest rate, the monthly payment amount, the total interest and other charges, as well as the total amount you will have to pay for the loan. When you click on accounts, you are given a list of the 3 main account services offered at the commercial banks: current accounts, fixed term deposit accounts, and saving accounts. Click on the different account type to learn more about the services offered and tariffs from the different commercial banks. When you click on cards, you're given a list of the 2 main card services offered at the commercial banks: credit cards and debit cards. Click on the different card type to learn more about the services offered, such as card type, card price, card limit, annual regular charges, and fee on cash withdrawals on the card. Gereranya was developed as a mobile platform and can be downloaded through Google Play Store and Apple Store. If you use a tablet or laptop, you can also use and experience the web version that can be accessed through https://gereranya.bnr.rw. The National Bank of Rwanda does not enter data into this system, and the values shown on the platform are estimations. They may change depending on individual bank policies. Risk evaluation includes your individual risk profile. For more details and clarification, it is always advisable to contact the bank of your choice. The platform was developed in accordance with Article 19, Paragraph 2 of Financial Service Consumer Protection Law on publication of financial service fees.
Thank you very much. Thank you, Bob, for introducing me. Joining the Deputy Governor on this panel is Mr. Robin Burstall, Chairman of the Rwanda Bankers Association, who will be giving us a perspective from the financial sector players. I would also like to invite Mr. Damien Dizeye, Executive Director at ADECOR, which is the Rwanda Consumer Rights Protection. Mr. Damien, please make your way to the stage.
They took the chair. Yeah, they don't want the consumer association.
The bank is arranged.
You kindly bear with us as we make arrangements for Mr. Damien to join us here on the panel. Thank you very much. I believe that we all had a chance to have an insight on the Gereranya comparator that we are launching today at the National Bank of Rwanda. And this set of panelists are going to help us to understand more and to definitely get more insights on how the comparator came about and what are the benefits that the market is going to enjoy from the comparator. To start, I would invite the Deputy Governor. Understandably, the comparator is not a project or an end in itself, but it's part of a bigger agenda of consumer protection. And this leads to my first question to the Deputy Governor. How far has BNR gone in terms of implementing the consumer protection law, noting that it's about to be a year since it was first enacted?
Thank you very much, Ingrid. And probably before I answer the question, I would like to, we were joking that probably the Bankers Association had taken away the seat of the Consumer Protection Association, but they will have to, we were glad that we can have Damien on the panel this morning as well. Secondly, on Gereranya itself, it's really a long-awaited tool that will allow consumers of financial services to get the right information and be able to compare the prices of different financial products and make informed decision as they contract loans, open accounts, but also use all financial services products. In terms of where BNR is in the implementation or enforcement of the Financial Services Consumer Protection Law, which was enacted in March 2021. So 1 year down the road, in spite of COVID, we have conducted various awareness campaigns of the law itself, but also educating consumers of financial services about their rights and the provisions of the law that protect them. Secondly, we are also working on the regulations, consumer protection regulations, that we hope that by the end of this financial year will be also approved and enacted, which will allow us as a central bank to be able to conduct supervision in the different financial institutions that we regulate, and be able to assess their compliance with consumer protection laws provisions. And lastly, in addition to the Gereranya tool that we launched today, we're also working on another tool on complaints handling, which will allow any consumer or clients of financial institutions to be able to lodge in their complaints about the services they receive, and so that as central bank we're able to also follow up with the different institutions on how those claims are handled. So these are some of the initiatives that have already been implemented by the central bank, but also the ones in the pipelines. And probably lastly, I wanted to emphasize that as restrictions due to COVID ease, we intend to continue awareness campaign and also engage the consumer, the citizens, not only in cities but also in rural areas through inteko z'abaturage, so that we also can inform them and conduct awareness on their rights as consumer financial services. Thank you.
Thank you very much. Maybe to shed more light on the awareness campaigns and also invite everybody in the room and beyond to sort of always participate. The central bank is willing to take feedback, to take on everybody's innovations to drive the financial service sector development. Deputy Governor, if you allow, to go deeper into the comparator. First of all, why the comparator, and why is NBR implementing it now, and what are the expected benefits?
I think one of the reasons why we developed this tool was to really equip customers with information from the financial institutions themselves. Currently, we have 11 banks that are onboarded on the platform. And it's part of really sort of, I would almost say, giving the rights to the consumers, especially the right to make informed decision, and be able to really get access in one, I would say, in one platform on the different interest rates, charges and commissions, for instance, on loans, and be able to compare the different offers that the banks have. And secondly, it also responds to the transparency that in pricing that we require from our financial institutions. And I think enhancing transparency in pricing, and this came out also during the questions that we had, is for really consumers to understand the pricing that all banks and financial institutions that will onboard also in the future, their pricing, that they're transparent. And also I think this incidentally will probably increase competition between our banks. When we were watching the demo, the video, if I can see that by taking a loan in one bank, how much I save or how much it costs me, you know, if I use the bank that I currently bank with, and I compare to probably another cheaper bank, then I will think twice before contracting that loan. The expected benefits, and probably Damien from at the core, from a consumer perspective, will have to will complement me, but I think we are regulators, but we also are consumers of financial services and products. So in addition to increased transparency in pricing and increased competition, I think it will also have a positive impact on the decisions that consumers take, and probably looking at, you know, our mandate as a central bank to ensure that we don't have over-indebtedness, being by households but also companies. I think a consumer, by seeing before even contracting the loan, the cost that loan has on them or on their company, this is something that we think will also prevent unnecessary non-performing loans, because we have to think, be also not only realistic, but truth be told, some SMEs or some individuals, they take loans without fully understand the burden that it is on them, on their finances, and hence having the right information from the get-go, I think it's one of the biggest benefits from this web comparator. Thank you.
Thank you very much, DG, for shooting us in the right direction. Before we move any further, I would like to remind everyone that the Slido is still available for further questions to the panel that will be received after this session, and also questions in the room to the panelists will be received at the end of, I would say, prepared questions. The next question, I would really like to ask it to both Mr. Damien and Mr. Robin to give us, first, on the consumer's perspective, what do you think this tool is going to help or serve the consumers? And then after Damien has given his consumer's perspective, I would request Mr. Robin to also shed light on the industry players' perspective in general. We'll go with Damien first.
Thank you, moderator. Thank you, Deputy Governor, for allowing me to share the benefits of consumers in financial services. Let me thank the National Bank of Rwanda to introduce this platform, web comparator, to consumers. The benefits from consumers is that this platform is a good tool which will help consumers to access to information and also to trust financial services. Before, consumers didn't know and don't aware about products, different products and services in financial services. But from now, we see that is a good way, and we think that this will be also introduced to other financial institutions. For example, insurance, MFI, and telecommunication companies, where consumers have different challenges related to pricing. It also allows consumers to take a good decision while choosing different products or different price for service provider. This will help consumers to compare the cost of products so that they can use and they can purchase the services while service provider can also help consumer provide different information, because consumers have a right to information and also they have right to choice. The good thing is that transparency in pricing also will be and will increase the trust of consumers. And you know that without competition, consumer cannot have a right at affordable price. On this comparator platform, consumer, before purchasing good services, they have to check before purchasing the price or the products. On the consumer side, we think that consumer from now, they are happy on these tools. These tools is well useful because they can be funded on phones and also in different languages, in Kinyarwanda and English. We think the National Bank of Rwanda will also put this platform in French. We know that French also is a good language you can use in Rwanda, so why not French? A message I can share to the National Bank of Rwanda is asking to them how they will monitor and these services from financial institutions, because one, to have this platform is good, but the way how they will monitor is another thing. I think the financial institutions have to follow rules and regulation, and they have to respect those rules and regulations. What benefits, the benefit to have as consumers is that from now, the National Bank of Rwanda, as they introduced this platform, we think that currently they was working with private sector, financial service providers only. We think it was like public-private partnership, but now we think that they included public, private, and consumer partnership. Thank you.
Thank you very much, Damien. And maybe after this next series of questions, we will ask the Director for Market Conduct Supervision to shed more light on how this will be monitored to sort of answer to the question you raised. Now over to you, Robin, to give us the industry players' perspective on what are the benefits of this tool and platform.
Thank you. And I think that was the consumer protection side, now switching us off. I'm talking as a representative of the banking industry and not as a bank CEO. Pricing, I think, is currently more relevant for banks than ever before. Prices play a central role in customer satisfaction and profitability of our banks, especially in the current situation marked by cost pressure and changing customer expectations. Pricing then becomes of particular importance. There's a trend globally towards transparency, and it's making its mark felt more and more. Technology and regulatory efforts are key factors in this, and technology has reduced information costs. So you can do charge comparisons and pricing comparisons much more easier as a consumer. But regulation can also be a driver of transparency. But at the same time, that transparency creates market efficiencies. So we have to take some of the specifics into account, and also customer decisions are not only based on price, but a number of other items. Customer satisfaction is also extremely complex. Customer bank relationships are usually long-term orientated, and therefore customer satisfaction is very important for us within the banking sector. If you look at commercial banking products or financial products, usually tend to be what is called low involvement decisions. Now, when I say low involvement decisions, you have to all admit that there's not a lot of excitement when you look at taking on a bank loan or process. It's usually tedious, but from a different perspective within the products themselves. Price relates also to, so if we take payment services are perceived as a homogeneous product until they don't work. So then it becomes about the reputation of the bank on an ongoing basis. If you look at price, price relates to expected performance, and then there's also fairness or perceived fairness. So there's been a lot of work being done now on having a price conversion within the sector, that we set policy here, we increase or decrease prices, and that would then be directed towards the banking sector. And then they would set their prices accordingly. If consumers see banks increasing prices that don't relate to a transfer mechanism, but relates to them making more money, then the consumer feels that there's unfairness that has come into play. At the same time, innovation, design, prestige also monitor the price that banks can and cannot charge for their products. And then if we look at some items that moderate the pricing or the decisions that customers are making, it's once again beyond the pricing mechanism. It's convenience and accessibility, the trust or reputation of the organization that they're dealing with, the perceived competence, and then at the same time security, and especially in this day and age, cybersecurity and data protection is really important from the customer. So I've made copious notes, but I think I'll draw this to a conclusion. Moving towards greater transparency, there's a greater onus on the banks in convincing and communicating with their customers about their prices and the services that they provide. So education then becomes much more important as you create more accessibility to pricing information. Ideally, the regulatory framework conditions can act as a catalyst to this process. The decisive factor is, however, an evidence-based approach to regulation that acknowledges the multifaceted nature of price determination processes in the banking sector. In particular, the formulation of countrywide regulations that remain a particularly difficult area to contain and control, but also puts the burden in the hands of those that are providing the products and services.
Thank you very much, Robin, and thank you for really putting out transparency as a driver of both market efficiency and customer satisfaction. On the same note, though, I would want to ask you, what do you think are the specific roles of financial service providers to make the Gereranya platform a success in the market?
The question was asked earlier about providing information in a timely and succinct fashion. I think that is our responsibility. And then ensuring that data is transferred, and then there's the trust element that we stick to what is being published and provided on online.
Thank you very much. Before we receive questions from the public, I would want to ask Mr. Damia to again speak to the consumers and to all financial service providers, basically all the stakeholders in providing financial services. What would be your message in favor or to benefit the consumers?
Thank you, moderator. The message I can share to stakeholders is that all stakeholders have to follow rules and regulations, and also they have to take care on consumer rights, because in competition, when you don't care about consumers, about your clients, one, it's unfair. So from now, because of this platform, we think that's from the platform and also from the law enacted last year, we think that this is a starter. We will get consumer will get informed decision, and also it will increase financial inclusion. Thank you.
Thank you very much. Yes, please.
So I wanted to also add on another aspect that, yes, we've spoken about fairness, etc. But what is important in the market, and you look at it even with the way we're now looking to control switching costs between banks as well. If you stifle the ability for consumers to make choice, it leads to a less competitive market, and customer service actually suffers as a result. This is an ability for the industry to focus on customer service, to maintain and retain customers. So it has a dual effect. Although it does provide them with protection, it also gives them the ability to make the decision, but at the same time raises the bar from a customer service point of view within the industry.
Thank you very much, Robin, for that insight. We are opening the floor for the public's questions. Please help me circulate the mic if you see a hand raised. Nagira ngo nongere nibutse ko umurongo w'ibibazo ugifunguye ku badukurikiranye online kuri Slido. Mbere yuko twakira ibindi bibazo, I would like to maybe give the floor to Mr. Jared Tabimana to shed more light on one of the concerns that was raised by Damia around how will the information be monitored by the National Bank of Rwanda.
Okay, thank you, Ingrid. So on the question that was raised by the Director General at the core in relation to how we shall be monitoring the use of the tool, let me recall that this tool was put in place in line with implementing Article 19 of the Financial Services Consumer Protection Law, number 017/2021, as it was said. And the data you are seeing in the platform are just uploaded by financial institutions themselves. And we are putting in place the guidelines and the regulations on how frequently the financial institutions should be updating. So, and we shall continue monitoring, conduct site visits to ensure that the data uploaded really reflect the actual data that banks have. Thank you.
Thank you very much, Gerard, for sharing that insight. If we have more questions in the room, please feel free to raise your hand. A microphone will be distributed. There's a question here, please help.
Thank you, Honorable Governor. My name is Prudence from the city of Kigali. First of all, I want to commend this tool that is also coming to, as an addition to the digital services that are being offered to the general public, and also, as it has been highlighted by the DG at the core, we would love to see these expanded to more services. He mentioned insurance services. I want to come back to the other group of people that we are seeing, especially in the informal sector, that are using the microfinance services that might also need to be informed before they take the decisions with regard to the financial services being offered to them. Again, as I conclude, Honorable Governor, we want to pledge our support, especially during the dissemination and also awareness campaign that make sure that this tool and information actually reaches out to the big number of people. As the Deputy Governor mentioned during our Inteko z'abaturage, we need to also be part of the exercise for the dissemination. Thank you.
Thank you very much, Lord Mayor. DG, would you want to comment on that?
Yeah, thank you, Ingrid, and thank you, Mayor, for the recommendations. Yes, other financial institutions will also be included on the platform, and will definitely, as I mentioned, during the Consumers' Rights Week, earlier this month, we were able to participate to some Inteko z'abaturage, but we'll, as I mentioned, now that physical gatherings are allowed, ensure that in addition to media campaigns we're doing for the Gereranya and training for consumers, we also include more participation to Inteko z'abaturage across the country. Thank you.
Thank you very much, Honorable DG. Do we have any other question in the room? Oh, there's a question at the end. Yes, please. At the same time, I would request the technical team, if we have questions online, to let them through.
Thank you. My name is Ignace Musangafura. I'm the CEO for Goshen Finance, PLC. First of all, I would appreciate the process for this practice of customer protection principles, putting in place the regulation and awareness campaign, mobilization, supervision to the financial institution is also needed. But I would suggest the central bank, as you have started to put in place some tools, to put also a tool of a self-assessment to the financial institution. Because my institution has been in a process of international certification of customer protection. There is a tool called the SPIU, I think, where you can find different indicators. There are like 200 indicators of customer protection. Here, the tool there is just focusing on pricing, but customer protection is wide. There are different indicators, communication, how do we handle the complaint of our client. Of course, the prices are key to the customers, but we need to increase the indicators. But I think the central bank will improve and increase different methodology of self-evaluation, to the institutions. That tool can show you the percentage when you put all the practice, that how have you implemented policies, how if you train your staff, if you train the client. They are different practice, but I think in the future the tool will be improved, and the target of being fully certified will be achieved. Thank you.
Thank you very much. We had another intervention at the back. Please raise your hand again so that the mic can come. All right, I think there are no more questions in the room. Bob, would you please confirm that we do not have any questions online? Thank you very much. Maybe before we close, I would give Honorable DG another round of intervention, especially on the last, I would say, comment that was given on other initiatives related to consumer protection. I believe there were some that were mentioned in pipeline before, and also concluding this panel discussion. Thank you.
Thank you, Ingrid. I think a lot of ongoing initiatives already have touched upon that, and probably wanted to emphasize that, one, we count on financial institutions to really own this platform and update their pricing so that consumers have updated information. And lastly, I wanted to thank my fellow panelists, Robin as chair of the Rwanda Bankers Association, commit that BNR continues to partner with both the industry but also the consumers. Thank you.
Thank you so much, Ingrid. Thank you, Robin. Thank you, DG. Thank you, Damien. A round of applause for our panelists as they make their way. Of Rwanda for her closing remarks.
Thank you, Bob. Honorable Governor, honorable senators, honorable members of Parliament, honorable Governor of Eastern Province, Lord Mayor, BNR board members, distinguished guests, all protocols observed. First of all, I wanted to thank you for your participation and contribution to this first monetary policy and financial stability statement session, and your valued contributions and questions. I will not be long. I think we've had a whole morning, one, assessing what the performance of our economy and our financial sector has been in the last 2 years, which have been challenging years. But unfortunately, we're going through another, I would say, uncertain times due to the, and we've talked about it at length, the ongoing war in Ukraine. But as well, we're still feeling the pinch, I would say, from the COVID-19 pandemic and its recovery. We are happy to note that our economy has been resilient with a double-digit growth last year. We're looking forward to a growing economy again this year. And our role as central bank, one, to ensure price stability. We take it very seriously, and as the governor mentioned, we continue to monitor the inflationary pressures, and the Monetary Policy Committee will act accordingly when needed. But also what is important is the concerted efforts that the National Bank of Rwanda in consultation and coordination with government agencies is also monitoring to ensure that we mitigate the impact on inflation, on price, on our economic growth from these different crises. Lastly, on the consumer protection side, we are happy that we were able to launch this morning Gereranya, which is our price web comparator, which will be enhanced and encompass other financial institutions. But we do hope that this tool will make a difference, not only in the competitive landscape of our industry, but also as we continue not only financial education, but also ensuring that our citizens and consumers of financial services have access to information and can make right decisions. So without further ado, I would like to once again thank you and probably invite you to a networking cocktail that's prepared outside for all of you who still have time. So thank you again very much, and see you outside for more networking.
Thank you, everyone. Just two quick announcements for the media in the room, just to let you know that we'll have a press conference in the next few minutes. And also, you can share with us your feedback on Slido. I think they'll project it up there, and just 5 minutes, and you can give us your feedback on some of the how did you enjoy the event, if this was enough, and areas of improvement that you'd like to share with you, or any other comments. You can share with us on Slido. It will be running throughout the day. Thank you once again. Have a good day. I'll ask the IT team to keep Slido running on the screens. For the media houses, I would like to ask those that have their cameras at the back to bring them in the front, and you can take your positions. Next. Take just a few minutes and share with us your feedback. As you see on the screen,